Hello and welcome. In this video, we will learn why a pre-open market session is required and what really happens in the session. Okay? Now, to answer the first question, which is why a pre-open market session is required, let us take an example. Let us say there is a company XYZ, and let us say that at 3:30 p.m. today it closed at 100 rupees. Okay, so this was the closing price of the stock of this company today. Now, generally, the news related to companies' results or companies come after the market hours. And let us say that there is a good news. When a good news comes about a company, generally the price of the stock opens higher than the previous day. But then, at what price should it open? Who decides that? All these things will be answered if we know or learn about pre-open market session. Okay? Now, pre-open market session is where the opening price of the stock is decided. Alright? Now, instead of a good news, let us say there is a bad news about the company. If there is a bad news, generally the price will open at a lower price than the previous day's closing price. Now, when we say lower price, at what price? To decide this, we have pre-open market session. Okay? Now, let us learn what happens in a pre-open market session. The pre-open market session starts at 9 a.m. daily. Daily meaning during the market days. At 9 a.m., the pre-open session starts. And from 9 a.m. to 9:07 a.m., the exchanges collect orders from people. Now, what is this order and who can place it? These are all buy orders and sell orders. And anyone can place orders. People like you and me can place orders. Okay? Let us say that you have some stocks of a particular company, and let us say that there is a bad news about the company. What you want to do is sell the stocks as quickly as possible, or you want to sell it right away. If you want to do so, you can place your order during this time. Or there might be a good news about the company and you might not be having any stocks of the company. In that case, if you want to buy the stocks of a company, you can place buy orders during this time. Okay? If you do intraday trading, then without having the stocks, you can place sell orders too. That is also possible. Okay? So from 9 a.m. to 9:07 a.m., anyone can place buy orders or sell orders. Okay? You can also modify your orders or cancel your orders. that is also allowed. Alright. Now, from 9:07 a.m. to 9:08 a.m. is the closure period. At a random time between 9:07 to 9:08, the exchange stops collecting orders. Okay. There is no fixed time here. It is random, selected by computer. So technically speaking, you can place orders, modify orders or cancel orders from 9 a.m. to 8 a.m. But since the exchange stops collecting orders between this time, it is safe to place your orders between 9 to 9:07 a.m. Okay? Yes. Next, after this is done, from 9:08 a.m. till 9:15 a.m., the exchanges match the orders. Okay? Some might have placed limit orders. Some might have placed market orders. Some might have placed buy orders. Some might have placed sell orders. So the orders collected during this time is matched in this time period. Okay? And after matching, they find out the equilibrium price. What is equilibrium price? I'll take an example and I'll explain in a minute. But they'll find an equilibrium price here. And at that equilibrium price, the market opens at 9:15 a.m. Okay? So this is the mechanism. During this time, they collect only orders. They do not execute any of the orders. During this time, they match the orders. They do not execute the orders. Orders are executed at 9:15 a.m. Alright? Now, let me take an example. This table is from NSE website itself. Okay? I'll show you where I got it later. Let me take an example of the one that I had given just before few minutes. A company XYZ closing at rupees 100. Okay? Let us say that yesterday the price of the stock of the company XYZ closed at rupees 100. Okay, yesterday it closed at rupees 100. Let us say that there was a good news yesterday evening, and today the market has to open at some price, and to decide the price we have pre-open session. Okay, and this is what happens from 9 a.m. to 9:07 a.m. Okay, the first column, second column, third column. This is what happens between 9 a.m. to 9:07 a.m. Okay, so let us see what happens. From 9 a.m. to 9:07 a.m., people have placed buy orders of the stock at 103 rupees. And how many stocks are in the buy order? 13,500. Okay. Now remember that this is not the number of people who have placed buy orders. This is the demand of the stock. I single-handedly might have placed an order of 13,500 stocks, or 5-6 people may have placed the order to buy collectively 13,500, or it might be more than that too. Okay, we do not know. So all these are not number of people. All these are number of stocks. Okay. So at 103 rupees, 13500 stocks are in buy order. Okay. And some people have placed orders to sell 11500 stocks at 103 rupees. Okay. Similarly, at 104 rupees, 9500 stocks are in buy orders. 9800 stocks are in sell orders, meaning 9500 stocks are ready to be bought at this price. 9800 stocks are ready to be sold at this price, and so on. Okay. At 108, 4000 stocks are in buy orders. 8500 stocks are in sell orders. Okay. All right. So this is collected between 9 a.m. to 9:07 a.m. Now, this is what is done. This is what is done between 9:08 a.m. to 9:15 a.m. Okay. This is what is done between 9:08 a.m. and 9:15 a.m. Now try to understand this. All right. We'll try to understand this. At 108 rupees, 4000 stocks are in buy orders. 4000 stocks are in buy orders. Okay. Meaning people are willing to buy stocks at 108 rupees per stock. How many people? We do not know, but they have collectively placed orders of 4000 stocks. Next, at 107 rupees, there is a buy order of 5000 stocks. Okay, there are buy orders of 5000 stocks. Now try to understand this. People are ready to buy at 108 rupees. Or how many stocks are, or I can say, let me say people itself. It will be easy for you to understand. 4000 people are ready to buy. I'll say people itself. It will be easy for you to understand. 4000 people are ready to buy at 108 rupees. Now these 4000 people will also be ready to buy at 107 rupees. Correct? Those who are willing to buy at 108 rupees are also willing to buy at 107 rupees. Right? Think of yourself. If you are willing to buy something at 108 rupees, you will also be willing to buy at 107 rupees. Correct? You are getting it at 1 rupees less. So, totally 4000 plus 5000. 9000 people are ready to buy at 107 rupees. Okay? Similarly, 6500 people are ready to buy at 106 rupees. Okay, I am saying people so that it is easy for you to understand. I am repeating again and again. Okay, but think now, people who are ready to buy at 108 rupees will also be willing to buy at 107 rupees and also at 106 rupees. Correct? Similarly, people who are willing to buy at 107 rupees will also be willing to buy at 106 rupees. So, 6500 plus 5000 plus 4000, total of 15,500 rupees are willing to buy at 106 rupees, and so on. Okay, 103 rupees collectively adds up to 50,500. Meaning, people who are willing to buy at this price, this price, this price, this price, this price will obviously will be willing to buy at this price. People who are willing to buy at 105 rupees will be willing to buy at 104 and 103 too. Correct? So, this is collective of 50,500 shares. Okay? Shares. Now coming to supply. Supply. At 103 rupees, I'll say people once again. 11500 people are ready to sell their shares. Okay? In actual words, people are willing to sell 11500 shares at 103 rupees. Okay? So 11500. Next, at 104, people are willing to sell 9800 shares. Alright, or I'll say, to make it simple, I'll say 9800 people are ready to sell at 104 rupees. Now think, the people who are ready to sell at 103 rupees will also be willing to sell at 104 rupees. Correct? Think of yourself. If you are willing to sell something at 103 rupees, won't you be willing to sell the same thing at 104 rupees? Of course you will be, because you are getting 1 rupees extra. Correct? So, this plus this is 21,300, meaning 21,300 stocks are ready to be sold at 104 rupees, or 21,300 people are ready to sell their stocks at 104 rupees. In the same way, it goes till here. Okay? People who are willing to sell their stocks at 103, 104, 105, 106, 107 will obviously be willing to sell their shares at 108 rupees. So we add them up and we get this. Okay? People who are willing to sell their shares at 103, 4, 5 will be willing to sell their shares at 106. Correct? Yes. So that logic is applied to add them up. Now you can pause the video and take a calculator and calculate this if it helps you understand. Alright? Now, after this is done by exchange sees at which point they can have maximum trade, or exchange checks as to where maximum quantity of shares can be traded, and it is calculated like this. Okay? See, now once again I will explain in different words so that you are able to understand. There is a demand of 50,500 shares and there is a supply of 11500 shares. Now can you tell me whether the sellers will be able to supply everything for the buyers, or once again it may have sounded confusing. Now tell me, there are 50,500, or let me rephrase it in different words. Let this be you, demand be you, let supply be me. You want 50,500 rupees and I have only this much. Okay? The maximum I can give you is this much. The maximum I can give you is this much. Even though you want this much, I can give maximum of this much. So maximum tradable is this much. So I want extra, but that cannot be given by you because you only have this much. Okay? Coming to this, you want 37,000 rupees, but I have only 21,300 rupees. I can give everything to you, but still you will be wanting something extra. Okay, so maximum that I can give you is 21,300. Okay, so here you want 27,500 shares. Sorry, you want 27,500 rupees. I have 36,300 rupees. So whatever you want, I can give it. Okay, whatever you want, I can give it. So maximum I can give is this much only. Even though I can give this much, you do not want that much. You want only 27,500. So maximum that is tradable here is 27,500. Okay. Next, you want this much, I have this much. Even though I have more, you only want this much. So maximum I can give is this much, or maximum tradable is this much. You want this much, I have this much. So I can give you 9,000 rupees. Okay, 9,000 rupees. Maximum that can be traded or given is this. You want this much, I have this much. Maximum you want is this, which can be given by me. Okay. So this is how calculation is done. I hope I convinced you about this. Okay. So there is a demand of this, supply of this. Maximum that can be given is this. So it is written. All right. Now, after calculating this, they see out of these at which price maximum quantity can be traded. And where is that? That is here. Okay, maximum of this is this. So maximum stocks can be traded here, and that is at 105 rupees, and 105 rupees would be the opening price of the stock today. Okay, the price where maximum quantity can be traded becomes the opening price, and at opening price this will be executed, and remaining orders must be modified, or it will be executed according to the numbers. Okay, do not worry about that. All right. Yes, so this is how the opening price is decided. All right. Yes, I hope the concept was clear to you. Now let me go to the NSE website and show you a few more details about this. All right. So I am in nseindia.com, and I am in the web page that is meant for explaining pre-open session. Here if you scroll down, you can see how the orders are matched. Okay. So this is the priority. First is limit orders, then is market orders. Okay. First limit orders are matched with limit orders, and then remaining limit orders are matched with market orders, and then finally market orders are matched with market orders. Okay, and this here is the table that I had taken to explain you the concept, and I had explained it taking the example of straightforward pre-open session. Now when we say pre-open session, many things can happen, many complicated things can happen. And when that happens, what happens? What does the exchange do? That is written here. You can go visit this website and read it. Okay. Now let me come to market data and go to pre-open market. All right. So here Nifty 50 is selected, and the constituent stocks are here. Let me select all. Okay. If I select all, I can search from the list of all the stocks available in NSE. So here, just for the example, I'll type Jio Financials, and when I click on Jio Financial, I'll get all this. Click on the plus icon to get the data of pre-open session. Okay, how many orders were placed in pre-open session? For sell, this much, for buy, this much, and equilibrium price, the price at which the stock opened, is this. Okay, so this is the detail of pre-market session, and this is how you can access it. All right. Yes, I hope the concept was clear. I'll see you in a different video. Till then, take care and thank you for watching.